Gaming Realms, good company, but again, valuation is a bit stretched, and didn't really rally on the news on their results. But nevertheless, they've not had any of the problems with. I think it's different sector. It's not. They are B2B, aren't they? So they supply games, and I don't think they're having a problem because they're not B2C so much. So, but you would think they still have issues, but it's more like gambling areas, isn't it? So, Gaming Realms. There we are. So what are they? They're 56 out of 100. Market cap 97 million. Enterprise value 89. Can you see this? Okay, 89. Cash 7. It's all good. Operating cash flow, free cash flow, all good there. Apart from the value you see and potential. Even the broker now in the gaming, there we are, 50% up. I don't see why it's not suffering in the downturn. So these are results. Good growth. Growth company has to have growth. Value, almost, secondary importance is growth. It's not crazy. EV/EBITDA is okay. It's not crazy. I was looking at these, and I think when the results come out, I'm not going to make the same mistake I made with Ramsden's here, because the Ramsden's come out, record-breaking results, and it went down. So again, look at that. Momentum is now. What's the momentum? Is it showing that? Yeah, momentum. Look. So the momentum there is down. So until you start ticking back up again, that's worth looking at. So it's a good company. It's worth keeping an eye on. Any weakness here, I'd be tempted. I mean, if this comes down, literally rolls over, then I'd be tempted. But let's look forward to the forecast a bit. See what the forecasts are like. So it's going to do double digits, not 20%. But look at that. You're starting now to get the PE come into line on future forecasts. So it's not a bad start. They've got growth. They've got value. What haven't they got, ladies and gentlemen? Yes, momentum. That's all they need. Luckily, they're a gaming company that's doing very well. And they've really got... Did you see the stats on Trufin? The return on capital employed for PlayStack. It's phenomenal. Literally, they wouldn't have to release any more game now and they make profit on them. But they are one of those gaming companies that hasn't expanded crazily during the lockdown, and PlayStack's doing very well. But to me, it's not a unique part of the business. It's a good business, but to me, it's Stargo and Oxygen. I mean, Stargo is the one, and I think that's truly scalable. Does it have a moat? It must have a moat. Why would Lloyd's and Sage and all that and the Bank of Ireland want to use it if Stargo didn't have a moat? That's the type of company, honestly, to keep looking out for. Same as sort of Beeks, those kind of companies. I really rate. I'm not saying you can't get good returns on other companies, but you see there, if you really drill down into it, do some deep research on those companies. Well, you don't have to do deep research. When you see the New York Stock Exchange Group are using big stuff, it's the biggest stock exchange group in the world, pretty much. Then you understand they've got something special. When you get these big players, using a small company's tech, they've got something special because they haven't got it. They haven't developed it, and they haven't got it from anywhere else, apart from them. So, Gaming Realms, that'll be on the watch list, I think. So hopefully it'll be soon. I mean, I'll add it on the document and add it up there, but that'll change. But I do like Gaming Realms. I just want to see that it is rolling over a little bit. Who knows where it could roll over? You may get a little seller come in and start dipping down there, but and again, it's done. Gaming Realms has done so well. It's one of those 10 baggers, I think, from from there, from 5 pence up to 45 pence, almost close to 10 bag. But when you get that, you even get a bit of congestion happening when it's rallied so strongly. But yeah, keep an eye on it. It's on the watch list, I think.